time to dive deeper into the Trump effect we've been seeing in the market. For that, let's welcome in David Stryzewski, CEO of Sound Planning Group. David, always good to see you. Thanks so much for joining the show.
Hey, great to be with you, Caroline.
All right, so I don't know if you just heard my last conversation with Tatiana Kaufman, but she was saying, when it comes to the Trump effect, that, we've seen some stocks reverse course. We've seen some gains paired, but Bitcoin, for the most part, has held on to a majority of the gains, trading around 95,000 right now. So that being said, she said, if, you want to get in, do it quickly because this might be the last time you can get it for under 100K. What are your expectations for Bitcoin? Would you be a buyer on today's dip?
I am full disclosure, a Bitcoin investor as well as other crypto assets. And so I personally see Bitcoin going much higher in the future, especially with what I believe to be much higher inflation coming here as we continue to progress forward into the future. Bitcoin's going to do very well underneath that. The US dollar will likely do worse underneath that, but I don't think that happens, like right away. So will we see a Bitcoin above 100,000? Yeah, I think we'll probably close the year out above 100,000, and then it's off to the races if we end up getting a Bitcoin reserve here as a nation. And I think it's important to know, though, why would this be such an important idea? There are 32 different halving cycles that takes place essentially every 4 years. The point I want the viewers to understand is this. We have about 1 million coins that are going to be left of the 21 million total capacity of Bitcoins. We've got about 100 years that we're going to be mining that last 1 million. So I believe that Bitcoin is going to become very scarce and that we don't recognize what we actually have right now. Each coin, by the way, breaks down to 100 million individual pieces. And so it does have the ability to, break down into more fungible sizes, depending on where the price discovery ultimately goes.
Okay, so would you be a buyer today at 95,000, or would you wait for a bigger pullback given the huge run-up that it's already seen?
I think that people that are coming in maybe for the first time, the idea here when you're going into a new idea, especially as it's seen new highs, is that you don't necessarily want to go all in right off the bat. You want to allocate at various portions. So yeah, when we see dips, that's when we want to buy. But if we look at and take a playbook out of Warren Buffett right now, he's sitting on excessive amounts of cash in general because I think he, like myself, is expecting that sometime Q1, Q2 at the latest in 2025, we're going to be seeing some pullbacks. And who doesn't love a good sale? I think I'm more interested in finding great buying opportunities, and I think that Bitcoin is a great buying opportunity, especially if we've got time and the next couple of years in our horizon for that investment. If you're trying to get rich tomorrow and buy sneakers with it, not the investment for you. Very volatile. You could lose a lot. You could go down a lot.
All right, so I would bet that Warren Buffett is not sitting on that pile of cash to buy some Bitcoin, but I guess I could be surprised here. Just in terms of broadening it out and looking at the overall market, you talk about much higher inflation in the pipeline. That obviously would have implications for the Fed. This market certainly wouldn't be too happy about that. So how are you looking at this market heading into year end, given all of the enthusiasm we've been seeing, given that seasonality is on its side, and then looking ahead to 2025? Where does it go from here?
All right. Well, we've got 56 days until January 20th. And so what's amazing is the Trump effect, as we just started out talking here. This guy gets elected, and then all of a sudden Putin wants to talk peace, Iran wants to talk peace. All these things begin to shift. Stock market goes to record highs, crypto market to record highs, real estate's at record highs. By the way, when things go to record highs, that's an inflationary idea. Because we could get overheated here. Now, what I personally believe occurred is that when Powell dropped rates on September 18th, that he made the Arthur Burns mistake of the 1970s. And what happened is Arthur Burns ended up dropping these interest rates at a time that, we kind of thought that inflation was cooling down, but it was right in front of an election, specifically Nixon. And what ended up happening is he cut those rates and then inflation reinvigorated here. And so I personally see inflation coming in real hot right now. You can't print money like we're printing money today, spending like we're spending today, and not see inflation. I mean, Milton Friedman gave us that idea and understanding that inflation is a monetary phenomenon created by central bankers. And so the central bank in the printing is also ultimately causing a lot of the inflation that we're seeing. So I foresee a recession, although I think that, if we're talking about the storms and the various clouds out here, I think that we're going to see, the best team in place to address this. And what I mean by that is there's not been another president that I can at least remember who's coming in with this idea of actually cutting spending, like in a meaningful way. And so how in the world do they do that? How do they sell that to the average person? What are the effects of that? I'm sure that there will be positives and negatives because nothing can be done perfectly. But ultimately, those are the ideas that we need to be able to have conversations about in order to, go forward. But I see a lot of volatility as we move here to the end of the year. There'll be ups, there'll be downs. Look for buying opportunities when certain things go on sale. But I think that various parts of our market and the economy, like tech, might be overvalued. Not out of the question, not a bad idea, but maybe it got, a little overheated here in 2024. And, it might come back down to earth here in 2025 and then, pick back up into the races as we go into the second phase of AI, which is going to be adoption into our lives and making our lives easier and lower cost.
But many would make the case, even before the election, this was an S&P less than 2% away from all-time highs. So many would make the case that's because the economy has been more resilient than expected, and inflation has been coming down to target, and the Fed's in this rate-cutting cycle, which should be bullish for the market. So if you think we're heading into a recession, which I know you've kind of held firm on, and if you think that inflation is only going to get hotter, to me, that sounds like we should expect for more than just some volatility heading into year end. How does that play out next year?
Well, first thing I want to say is you need to make sure that you have your parachute in place before you get on that flight. Right. So we've got to have our anchors in place here. And so one challenge I believe that we will see coming into 2025 is that we've got more issues that are going on in banks that I don't think has actually erupted yet. We've not really been talking about it, likely because we've been going into a presidential election. But the point here is that there are challenges at the foundations of who we are as a nation. If we think of, 70% of GDP has historically been the U.S. consumers spending. If we look at GDP right now, it's actually now the vast majority government spending. The vast majority of new jobs today are government jobs, not the consumer getting jobs. And a lot of illegal aliens are getting jobs right now. So I see the consumer struggling. And so I personally look at recessions based upon how the middle class is doing, better or worse, based upon the policy, based upon the season, based upon where we are. Higher interest rates are a big challenge. I think it's interesting now that we're beginning to talk about a 50-year bond. I've been mentioning this for multiple years now, and I think that we're going to go to a 50-year mortgage. It's going to be the only way that we can keep rates as high as they need to be for the investor, but ultimately get the price down far enough that we're going to be able to purchase homes in the same way that the average American is going to be able to afford. Because let's just be honest, our income is not keeping up with the cost of living. That's why unions are demanding 10% per year, raises, or they're not going back to work. I mean, 10% a year, that doesn't sound like we're at 2%, Mr. Powell. That doesn't sound like anyone's doing, so exceptional right now. So I think as we look at 25, there's parts of the market and the economy that are going to do well. Think pro-America, pro-North America, pro-reshoring, friend-shoring, oil that's going to drill, baby, drill here in the United States, metal miners that are going to be here in the United States that are going to do things with a pro-America first identity in some of what they're doing, and it's not about just throwing the rest of the world away. We just need to understand that as a nation, there's a lot that's slipping right now. And so this is why it's important that, President-elect Trump here gets back in, and that he's got guys that he's bringing to the table like Elon Musk, like Vivek Ramaswamy. I mean, I can't tell you how excited it is for me as a business person to be looking at that and hearing some of these ideas and saying, wow, I wonder what creativity is going to come out of this. I wonder how they're going to be able to do it.
All right, we have to leave it there. David Stryzewski, appreciate your picks, appreciate your insights. Sound Planning Group, thanks so much.